Last year, I sent out a weekly PDF outlook to all persons that had a vested interest in my performance. This year, I want to transition into video format in hopes of allowing me to articulate my ideas more fluently and making the content more conveniently digestible to the watcher. For those not familiar with me, my name is Alan Perez. I'm a former JP Morgan Chase banker turned retail trader. The majority of my trading is swing, intraday, and the occasional position trading in the spot FX market. Every week, I go over my previous week's performance and go over any developing polarizing sentiment. And I combine that with fresh technical and fundamental analysis to develop a trading plan for the following week. I share setups that are attractive and opportunistic and go into depth as to why I think they may or may not work. So with this being my first weekly outlook, I like to go a little bit in depth as to what I really look for in the market. I'm going to show you what I'm looking for in the coming week, setups that I want to take, setups that I want to stay away from. So let's get right into it. My trading approach is very simple. I really believe in simple trading is the best trading. So when I look for trading setups, they are always aligned with the overall trend and momentum of the market. With it being the spot FX market, I'm really heavily looking at currencies, bonds, very high level macro data that really influences a currency's value. I utilize a software called the A1 Edge Finder, built by a guy named Nick. And what he did was created a platform to consolidate all of the relevant data that moves markets and puts it all in this program here. And what it does is it tallies up the good and the bad and creates a score for you. Now, this is not like a tell-all be-all. It's not a timing tool by any means, but it gives you a good holistic view as to what's going on in a country versus another or different economies. Although I reference this tool a lot, this is not something to just base off your trading decision. For example, you see that the dollar Canadian is very strong. Doesn't mean buy the dollar Canadian now and you're gonna be profitable. It just means that's something you want to kind of look into. Look for setups, tie in your technical analysis, and see if you can find an opportunity. Could be that sometimes the dollar Canadian has already appreciated so much, you're kind of late to the party. So you definitely need to be proactive in keeping up to date with the market. But what I really love about this software is every relevant piece is consolidated into one. Before I had this piece, I had to scout for all of this data by hand, and I had a tally. I had like a little notebook and I would have to tally each thing. It took a lot of time, so this saves me a lot of time. It basically bought me my time back, which I really appreciated. So when it comes to global economies, a lot of things really influence the market. The GDP, manufacturing PMI, services PMI, retail sales, inflation, all that stuff has a really big impact on the global economies. So that is what I look for. The stuff on the left hand side of the table, you have like your commitment of traders, retail positioning, seasonality, that stuff. Those are variables that you could use at your discretion if you really need them or not. You can call them the cherry on top, right? The seasonality isn't always going to be aligned. For example, the previous year was an election year. So those years are one-off years, right? That stuff happens every 4 years. So those can skew the seasonality. You want to use that as a confluence, but you don't want to make your sole trading decisions based on that. Because I'm in the spot FX market, the dollar is a very important indicator for me. At the moment, it's extremely strong and the money's flowing, the momentum is strong. So I want to make sure that I'm on the right side of that momentum and I'm following it as best I can. So a good way to get a gauge as to is money flowing in or out is to look at the weekly commitment of traders data. Now that data is a lagging indicator. So every Friday you'll get Tuesday's data, and it really helps me get a sense as to how much is flowing in or out. And I'll explain it a little bit on how I use it from Nick's software here, but you can do this without the software. You just go on the CFTC website and you can get the reports and you can just, dissect them through there. But this for me helps me a lot. Like I said, it buys me a lot of time. It makes it very easy to read. It consolidates it all in one platform. So I really appreciate that. What I like about the top table here is it gives you the long-term positioning of a currency. So for the most part, the US dollar has been pretty strong compared to the Swiss franc, the New Zealand dollar, or the Canadian dollar. So those are like long-term trends that have been in place. It's really odd for them to just flip from one side to the other. This is more of a gradual change, and you can see the gradual changes through the weekly COT filing report. So I like to look at, for example, the dollar here. You got a net position of 6,800 long contracts, a net change of 1% from last week's filing. 2,300 short contracts were removed from the dollar and 1,900 long contracts were removed. So that's why you see the net change of 1%. Whereas on the Swiss franc, you have a almost 4% decrease in the currency. You have 2,400 short contracts were added and 2,000 long contracts were removed. And that's why you see the net change of 3.91%. You do see that the dollar is way stronger than the Swiss. So whenever you look for opportunities in the Forex market, you want to look at the countries that are very strong and very weak, and you want to play those two. It's kind of like a balancing act. You don't want to trade something like the yen and the dollar where they're like pretty much half and half. You might not get some movement, you might get some chop. But when you're playing countries that are on the extreme long and the extreme short, that's where you can get those really good moves that are very opportunistic. Last week, the dollar Swiss was something I actually traded and profited from. So I want to continue looking into that currency pair because I do believe there's still some untapped potential that we can exploit. Now, once I confirm my bias for the week and the momentum that I want to follow, I then go into the charts and start looking for potential setups. I think it's very important that you follow the fundamentals first before you even look at the chart. One mistake I made a lot of times was I jumped into the charts, wanted to chart everything up, drawn the charts as much as I could, find setups, and I ignored the fundamentals. And when you ignore the fundamentals, you can very easily fall on the flip side of the momentum and get smoked along the way. So now that I have my bias and the fundamentals are aligned with what I think the direction is going to be, I now look into the charts. So here we have the Swiss franc chart. I want to target this previous resistance before we try to look for any shorts or anything like that. So let's flip to the 1 hour to get a better picture as to where we can enter exit from. So last week I went ahead and took a long position on the dollar Swiss. Looked something like this. I targeted the previous highs. I also took a short on the Australian dollar. I locked in about 13% on the positions. These are positions I've been building on after the move on NFP. Just because I do expect price to kind of retrace a bit to its origin, and I'm going to try to look for re-entry opportunities there. So another area of interest that I would like to re-enter the market. Now, let's keep in mind here that we are already very deep in the move. So you don't want to get too aggressive because you have all this room to go against you for whatever reason. So now that we are approaching what could be a resistance level, you don't want to get too aggressive. You want to preserve whatever gains you have accumulated or preserve your capital, and you don't want to get too aggressive because if this is all the room to the downside you have, if you're going really big up here and you have all this space to the downside, you can get wiped out. So we're going to be very conservative and protect our gains here. An area of interest that I would really like to look for is, and this is just me, I've been charting for a very long time, so my eyes kind of get used to areas of interest here. I'd probably like something like this, maybe something like this here, but this, you know what, I'm going to stay very conservative here. I'm not going to be aggressive. This is what I like to see. We can see on a fib what it's going to be. Yeah, about 50 to 68% or 61% retracement. That looks pretty good to me. So I'd feel comfortable going into there. I want to target the 92.50, or I want to target 925. 925 here. And then as far as stop loss goes, always the previous low here. Now, when it comes to this position, now this is where discretion comes in, because if price retraces all the way here, you still want to be mindful of what's happening in the day-to-day market. So last week, what happened was the dollar dropped in, very rapidly because of surprise news coming out of the Washington Post and I think another source about calling bluff on Trump's tariff plan. And so that caused a lot of depreciation in the US dollar very fast because tariffs in this case are strong for the US dollar. So that's why you saw that drop. Now, quickly after, Trump went ahead and reinforced his position on the tariff. But that's why you want to be very mindful of the current state, because if that didn't happen and maybe he did say, hey, we're scaling back or whatever the case may be, you could see continuation in depreciation. So always be mindful of the current state of the economy. And that's why a strategy can work really well, but discretion is very important, because without discretion, there's certain times where you probably shouldn't execute, right? There's times where if that story comes out and there's a continuation in stories being added to that new narrative, then that's when you say, I'm going to step aside, maybe catch some more depreciation in the dollar, maybe get a more attractive price But if you just say, this is the zone I'm going to get into, hop in, and you ignore the developing fundamentals, then you can lose a lot of money. So this could be a dollar cost averaging position, because although this is resistance up here, there is a big chance that we can blow past this and maybe target something like this. And if that's the case, you want to be prepared for it and positioned for it. I really like the euro, actually. Word on the street is the euro is going to parity back to its previous 2022 level, which, I mean, now that we've blown past this level here, I don't see why not. And then considering the 10-year here, this was a level that, you know, the street was watching for, and we just blew right past it. Now, what's interesting with the 10-year, and this is why I am adding to the strong dollar, low euro, euro going to parity, is because as rates go down, the value of a currency is also supposed to go down, right? When interest rates are high in a currency, money flows into assets like bonds because investors can get a safe, guaranteed high rate of return. But right now our interest rates are dropping and yields are going up. And that's something that's never happened in history before. And one thing about markets is when there's an obvious trend going, people tend to hop on that. So when it comes to the euro, and also considering that the euro is the most heavily weighted against the dollar, I can really see us stretching to the, stretching another 240 pips up to the parity level, at least. So what I want to see is some pullbacks, right, after the NFP. Usually what happens on a big news release like that is the price is going to spike one way or the other. And more often than not, the price is going to retrace back to its origin before the news release and then continue in the direction that it was intended to go. So in this case, we had the NFP release. It started here and it dropped all the way here. I would love to see a retracement. I mean, if we're going from high to low here, see how that aligns here, the 50% in this area here. So I would love to see price to retrace to this area and just ride the wave down, So I'll probably put something in here like this. I'll put my stop pretty high. I'll do 150 pip stop. And this is something I'm willing to dollar cost average. So if we are going, against here, I'm more than willing to just add some positions conservatively, build a nice size trade, and ultimately catch the move to the downside. So this initial one could go against me. We could see some appreciation into the euro until we ultimately fall. But this is what I'm looking for right now. And it could change throughout the week. What I want to try to do also is record when I'm executing throughout the week, just so you can see things I consider on a discretionary basis, right? So if price is approaching this level, and I don't know, we have some news coming up. We had the PPIs coming in right before I'm about to enter that level, then I might stay away, right? Because price can whipsaw up, and then I can just get a better price. For the US, you have core inflation year over year, inflation rate year over year. You see this forecast uptick a little bit. High inflation means that the rates need to be staying higher for longer, right? And because of the previous non-farm payrolls print that we had, it was really good. You could say, hey, look, the labor market's doing pretty well. We probably don't need to lower rates as fast as we think we should. And so higher rate for a currency means it's stronger, And going back to my original point, if you're going over, if you're comparing the currency to something like the Swiss, that's like at a 0.2% interest rate, right? The spread in interest rates are very attractive, especially when you're considering something that a lot of institutions do, which is the carry trade, right? So institutions, if your money is going into something like the dollar Swiss, you're going to be getting paid a positive swap for holding that currency, and you're catching appreciation on the trade. That's something that a lot of sophisticated investors look for. It's an obvious thing to participate in. So that's why the fundamentals are very important. So to wrap up here, I do see that the dollar is going to appreciate. And because of that, I want to consider some shorts here on the euro, somewhere in this area here. I want to see a pullback so we can build a nice position. And then for the Swiss franc, I want to get a retracement back down to this level here. Again, build positions conservatively, but if the opportunity presents itself to be intraday in the market, get some income on this move, then I'll happily take it. And that's about it. So to all my private interests, you guys are going to be receiving this video via YouTube. Hopefully it's more convenient and easily digestible. Keep up with the performance on a relatively real-time basis here. And to anyone else that may stumble upon this because it's going to be on YouTube, I hope that you find some value in this. Drop a like if you want to. I mean, I don't really care, but I think it could help as far as if it's valuable, if people see value, you like the thing, more people can see it, more people think it's valuable. I don't know. Like the button, don't. I'm just trying to make this more convenient to the people that have a vested interest in this. And thanks for watching.